You know, the buzz around artificial intelligence, it's been pretty much impossible to ignore, especially in the stock market. Ever since ChatGPT launched, late 2022, AI's impact has just been huge. Think about it. The S&P 500, it was actually in a bear market back then, but since that time, this broad index, it's surged over 50%. Now, most of us, we know the big names, right? The market favorites like Nvidia, Palantir. But what if I told you there are other companies, just as fascinating, that have been, well, quietly staging these remarkable comebacks?
That's exactly what we're digging into today. Yeah. For this deep dive, we're deliberately looking past those, daily headlines. We're focusing on two specific companies. They've orchestrated these surprising turnarounds, and we want to see how they've used AI to pull it off.
All right. So our mission here is really to unpack the stories of these quiet victors.
Yeah.
Understand what changed, the tech involved, what made these transformations click. Okay. Let's unpack this. And speaking of those quiet victors, our first one, Upstart. Wow. Here's where it gets really interesting. It has an absolutely dramatic history.
Yeah.
So what exactly is Upstart and why is its story so, well, dramatic?
Okay, so Upstart is basically an online lending platform, but it's driven fundamentally by AI. What's really key here, I think, is how it directly competes with traditional credit scoring, specifically that FICO score we all know.
And a three-digit number. Yeah.
Exactly. Upstart's AI model, well, it claims to look at thousands of data points, way more than FICO captures. The idea is a much more accurate risk picture, and that leads to, they say, significantly better lending results.
It's been quite the roller coaster for them, though, hasn't it? I mean, they IPO'd December 2020, right into that bull market.
Yeah.
Stock went nuts in 2021, but then the bear market hit.
Oh, yeah.
And the stock just plunged, like 97% drop as interest rates went up and just crushed their business.
Yep.
Absolutely crushed it. Yeah, they were pretty much forgotten by investors for a while there.
So what turned it around? How did they manage to, pull back from that edge?
Well, that's the comeback story. They didn't just stand still. Upstart made some really crucial improvements. A big one was introducing a new, much more advanced AI model.
Okay. More advanced now?
Well, it wasn't just about more data. It focused on picking up subtle signals during the application process that old models miss. Things like, how long someone pauses on a certain question, their sort of digital footprint beyond just credit history. This let them spot good borrowers even if they didn't have a thick credit file. That's a big reason their conversion rates jumped. It unlocked a whole new group of customers.
Right.
And they also expanded, moved further into big markets like home and auto loans, broadened their whole scope.
And clearly it's paying off. The stocks quietly staged this, really impressive comeback. What was it? Up 175% over the last year?
Yeah, quite a jump.
But beyond the share price, what are the actual numbers saying? How healthy is this comeback looking in the financials?
The financials really back it up. Looking at the first quarter results, revenue, up a strong 67% to $213 million.
Okay.
Originations, that's the total value of loans they helped set up even more, 89% to $2.1 billion.
Wow.
And that conversion rate we talked about, inquiries turning into actual loans, that improved from 14% to over 19%. 19.1%, actually.
That's a significant improvement.
It really is. And the bottom line, adjusted EBITDA, that's a key profit measure, it swung from a $20 million loss last year to a $43 million gain.
Big swing.
Huge. And maybe most importantly, the company expects to be GAAP profitable this year. Profitable under standard accounting rules. That's a massive milestone for a company like this.
So what does this all mean for you listening? Upstart, currently capped around $6 billion market value, and it's taking on this truly massive lending market. Seems like there's still a very large growth opportunity there if they keep this up.
Absolutely. And, the potential for even more tech improvements in their AI, that could really drive an inflection point for the stock.
Yeah.
If they keep refining things, keep executing on expansion, yeah, we could see even more upside there.
Okay, let's shift gears a bit. Our next company, it shares a remarkably similar kind of story to Upstart. Also kind of overlooked, weathered a storm, also thanks to AI. Let's talk about Lemonade, the AI-based insurance disruptor. What's their unique angle on insurance?
Right, Lemonade. They're essentially an AI-based insurance company, and they're really trying to shake up what's often seen as a very traditional industry. Their AI isn't just about pricing policies, though. They've used it to automate huge parts of the claims process, especially for simpler claims.
How so?
Well, imagine filing a claim on your phone and, getting paid in minutes because an algorithm verifies it instantly.
Okay, yeah, that's different from the usual weeks of back and forth.
Exactly. It completely changes the customer experience, and it slashes their operational costs. It's pretty clever.
And like Upstart, Lemonade also had that successful IPO during the pandemic boom, but then also plunged hard in 2022. What were the issues there? What drove their struggles and then eventually the turnaround?
Yeah, similar pattern. They faced a really tough stretch. The plunge was mainly down to, well, ongoing losses, growth slowing down as those pandemic effects faded, and just that general market shift away from growth stocks that weren't profitable yet.
Right, the sentiment changed.
Completely. But Lemonade's now mounted a serious comeback. It's driven by improving results and, critically, a new, very clear goal, reaching profitability by 2027. This focus on the bottom line seems to be resonating. The stock's up, 160% over the last year?
That's right.
And it really jumped last November, remember? After a strong earnings report and their investor day where they laid out that strategy very clearly, investors liked what they heard.
Okay, 160% is impressive. What key numbers really show this progress? What came out in their latest report that points towards this profitability path?
Well, their most recent report showed in-force premium growth actually accelerated. It was up 27% to over $1 billion.
An in-force premium is basically...
Yeah, think of it as the total value of all the active insurance policies they have. So accelerating growth there means they're adding and keeping customers faster.
Got it.
Total customers also rose, up 21% to about 2.5 million, 2.55 million to be precise. And importantly, their gross loss ratio over the last 4 quarters held pretty steady around 73%.
Meaning 73 cents of every premium dollar went to pay claims.
Exactly. Keeping that stable while growing fast is a good sign their AI is working effectively for risk assessment. And at that investor day, they gave specific. Adjusted EBITDA, profitable by 2026, and GAAP net income, profitable by 2027. Clear targets.
Okay, clear targets, positive numbers. But this raises an important question. Is there a risk they're just riding a wave of better market sentiment? Or do these figures genuinely reflect fundamental improvements from their AI and strategy? I mean, what potential challenges does Lemonade still face on this path to profit?
That's a totally fair question. It's always a bit of both, right? Market sentiment helps. And look, there's always the risk of big disasters. Things like the California wildfires, which did impact their Q1 results. That's just part of being an insurer. External shocks.
Sure.
But what we're seeing with the loss ratio improvements, the expense management, and those clear profitability goals, it really suggests that management's efforts are genuinely paying off. Streamlining the business, using AI better for selecting risks. It seems like more than just sentiment. There seems to be a real operational shift happening under the surface.
Okay, so accepting those challenges, what's the potential upside here? If Lemonade keeps heading down this path, what could the future look like?
Well, with a market cap around $3 billion currently, yeah, the stock could potentially double from here, maybe more, especially if they hit those profitability targets. That would be a huge de-risking event in investors' eyes. They are, after all, trying to disrupt a massive industry. If their AI keeps proving its worth, the runaway for growth is pretty substantial.
So wrapping up this deep dive then, it really feels like both Upstart and Lemonade, despite these, really dramatic pasts, they're powerful examples. Examples of how AI can fuel these surprising comebacks, drive growth in places you might not expect. It just shows, doesn't it? Sometimes the most exciting stories aren't the ones grabbing the headlines every single day.
Absolutely. What's fascinating here, I think, is how these two very different companies, one in lending, one in insurance, they didn't just sprinkle some AI on top. They used it fundamentally to innovate, to genuinely improve their core businesses and bounce back hard from major downturns. It really challenges that idea that only the first biggest names capture all the potential in a new tech wave like AI.
Yeah, it does. And that leaves us with maybe a final thought for you, the listener, to mull over. Think about how many other industries, maybe way beyond tech or finance, might be ripe for similar disruption. Similar quiet comebacks driven by these underlying tech improvements. What quiet victors might you uncover just by looking beyond the obvious headlines and, digging just a little bit deeper?